Welcome to my live stream. It is Monday, May 19th. The market has not opened, but there was big news on Friday that's caused the market to sell off this morning. And the news was that Moody's downgraded US debt. And what that means is the interest rate's going to go up on US debt. Good day to consider bonds because the prices of bonds are going to drop and the yields are going to go up, which isn't a bad idea. And we'll see how stocks trade. They're going to open in about a half hour, and we'll see if how far down they go, and if this is going to be a red day, a pretty deep red day, or if we're going to see an opening fall in stock prices that will rally throughout the day. It's a tough one to call. I don't know how much investors are going to focus on this Moody's downgrade, but it is causing the market to open lower. In China, stocks did trade down, and in Europe, some of the markets, I think all of them except for England or Britain, are trading down. So we'll see how the market behaves. Gold went up. Of course, gold goes up when interest rates go up, when there's more fear in the market. So that is interesting. Crude oil went down a slight bit, no big deal. Crypto is down to $102,530 per coin. And we'll see how that trades. All right. So this is just the next piece of news that's coming to the market, affecting stock prices. It might be a good day to consider any stock that you're looking at. You're already going to buy it. Well, today the market may give you a discount. So it's good to be prepared for like days like this. The stocks you already want to buy, great. You get even a better price. So we'll see how it goes. Genetic Smite. Hello to you, sir. Good afternoon to you. It is morning time here in California as we await the U.S. market opening. All right. So I wanted to go over earnings. We don't have a lot of stocks to go over just yet because we haven't, we don't have the markets to go over because the market hasn't opened. But we did have some stocks announce before the market opened, and we're already seeing earnings from Zim, ICL, which I took a glance at, looked pretty interesting. It's a materials company. They've been doing well. And then GSL, then Target Hospitality, which I'm unfamiliar with, so we might look at that one as well. And Zubio, you buying stocks today? Yes. And I already put in a buy order on some bonds, which I already bought some bonds this morning because my buy order was accepted. Okay, so let's start with Zim, which is a stock that I'm familiar with, and we can kind of get our head around this particular company. So Zim is a shipping company. They ship primarily all these big containers that take product from China to the US and so forth. And they have seen their stock go up and down. It really went up during the big supply chain issues, but it's really settled down. But the big choppiness that I'm referring to is right here. If you buy Zim at the right times, like just very recently, I mean, the whole market was in rally mode in April. And this one was right there with the market. It went up nicely. So let's take a look at the Zim earnings and see how it's affecting the stock price. It looks like pre-market, it's going to go up a little bit. This pays a huge dividend. Look at that dividend. We'll have to examine the dividend rate, see if they can pay it. So let's take a peek at Zim. So looking at their earnings, their reported revenues, I'm trying to see if they grew, if they contracted. They reaffirmed guidance. That's good. Declared a dividend of 89 million or 74 cents per share. So let's note that. So we got Zim at 74 cents per share. What is that annually? I'll calculate that in a little bit. All right. So So year over year increase of 28% on top line revenue. That looks really good. One of the concerns I had on shipping overall was with this tariff war, were we going to see economies contract and shipping volumes go down? If that was the case, shipping volumes went down, shipping rates went down. I think Zim was going to have a really rough year. Now that it looks like these tariffs are going to be resolved, it shouldn't bring down the volumes of shipping, I don't think, and the rates, I don't think, would go down. So if both of those, if that is the conclusion on shipping rates and shipping volumes, then Zim stock should be okay. The Zim business should be good this year, and it looks like they grew their revenues in the last quarter that closed by 28%. So that looks good. Looking at the rates, they also went up 22%. So rates are up. Very good. And most of that revenue then, if rates went up by 22%, was due to rates. Very good. So rates are helping Zim with their revenue. So their volumes did go up a bit. Looking at the quarter over quarter, actually, this is year over year. So this is the first quarter of 2024, first quarter of 2025. The rates went up, volumes went up. Very good. So that's a double green flag right there. That means the business is doing well. Free cash flow of $787 million. This is a small cap. So I think that's going to be a good number. So that looks good. So overall, I'm thinking this is a positive earnings report for Zim. All right. So cash equivalents were 3.14 billion. That's a lot of cash for a shipping company, and they've always been cash rich, or I should say for the last couple of years that I've looked at them, they've always had a good amount of cash. All right. So they're paying out 30% of their net income. So at 74 cents a share for the quarter, that's really not a big threat to their overall, balance sheet or solvency. That's a pretty comfortable dividend rate, 30%. So that looks good. So if we take 74 cents and we multiply it times 4, just to, estimate the dividend rate for a year using that number, I'm going to get $2.96. And $2.96 divided by the current stock price, I'm going to use 1880. Let me flip over to this. So 1880. So if I take 314 divided by 1880, so 16.7% dividend rate. That's a very attractive dividend rate for a company that seems to be operating well into the green, making money, growing their top line, the shipping rates have been favorable to them. So it looks pretty good to me. Now they did $787 million of free cash flow. If I annualize that number, it gets me $3 billion. The trailing 12 months was, and what I did is I took the trailing 12 months and just to imagine how tariffs were going to affect them, I reduced it by 25% as my starting point on the free cash flow forecast. So let me go ahead and update that, and I'm going to open up a screen. How you doing, Mike? Good to see you this morning. Thanks for joining. Good to see you, David. So let me open up another screen here that you guys can't see, just so I can see some numbers, and then we'll update the valuation. So the cash flow is really, really looking good. And I'm going to keep it at the 0.75 just to make sure that I'm conservative enough. But the free cash flow for the trailing 12 months is $4.014 billion. And I actually think that's really a high cash flow amount. And if we have a recession, you're going to see that amount come down. And I'm going to reduce it over years 2, 3, and 4 by 25%. And then long-term growth will be 3%. Those numbers are so good that even with a 15% discount rate, it's still producing an $11.5 billion value for those cash flows. Now, the market doesn't value shipping companies like other industries. It's just a fact. I don't think that'll ever change. But those are the numbers for the cash. Update the cash balance. And it looks like the cash balance is actually 314. Okay. And then they have some debt. So it's a real big discount on Zim, 75%. Let's take a look at their earnings per share. Now, only 4 analysts cover the stock, and they're all bears on the stock. They're all saying that it's going to be lower. They're expecting earnings per share this year is $1.29. And they also expect that next year they're going to lose money, and then the year after they're going to lose money. I wonder why. Maybe because they all expect a recession is coming potentially. Now, the numbers are all good. With Zim, it's a stock that you got to, in my opinion, this is how I made north of 50% on Zim, and holding it was either 4 months or 6 months. And the way that I did it, which is what I would do again, is I pick a place to buy into the stock. Now, I was not ready to buy just yet during these levels because we still had the tariffs on. I didn't know if they were going to be on for a year, if the economy was going to really contract and so forth. Now we got a bit of news, right, where you have the U.S. being downgraded by Moody's. And will that interest rate increase slow down the economy? Because now businesses have to pay more to borrow to grow. Consumers, like when they go buy a house, it's going to be more expensive. When they go buy a car, it's going to be more expensive, those kinds of things. So right now, I would not be buying Zim stock because it's seen a 56% rise. If you bought it at the right time, congratulations. I would wait for it to, you see just the volatility that this stock sees. I would wait for a time like this one or this one or this one. And then when I buy, I'm going to already define my exit strategy. Is it once in this case here, I sold once I got to a 50% gain, boom, just get out, because this thing is going to come back down. It goes down, goes back up. I mean, this stock is a perfect one to swing trade, get in, get out. But you see that over a year, the dividend is really good. So you're in the positive when you consider the dividends in the historic are 38.95. So you did fine. But I would argue that, I'm always looking for appreciation. Dividends are okay, but it's not how I value companies. I would get into Zim at the right time. at the right price and define my exit strategy. Go in, make some money, and then get out, hopefully not lose any money. So Zim's going to have a good day. They're going to be up 2.56%. And I think some of the people on the live stream bought Zim. And I know some of the members of the channel hold Zim, so that's interesting. All right, let me catch up on comments. Looks like we've got a good number of people on the live stream. Good morning again to everyone. And then SX is great. Hey, good afternoon. Good afternoon to you in Essex, Mike. Reddit continues to slowly go down. All right, dilution, huh? That might be the problem. So we'll look at Reddit. Put that on the list. And then we've got, okay, that's a continuation of your comment. Mohammed, good to see you. Thanks for joining. Kirk, good to see you. Thanks for joining. So, Shadow Guy, are there other shippers you look at? Not right now. I would say that I did like Zim from just a general freight perspective. And I know we've seen what often would come up in live streams is a lot of the oil tanker shipper companies. And I'm not sure how they're doing right now, because when you look at the oil markets, the oil prices are, for the most part, lower than average. And is that a consumption based kind of pricing because there's not a lot of consumption of oil? Is that what's going on? That one's we'll see. We'll see. Daryl, good morning. And then Mike, you've owned Zim 4 times in the last 10 months. Hopefully you made a lot of money. And Blocks for Fun. Hey, thanks for joining, and thanks for your support of the channel. I don't know if I have your email, so if you want to get me your email, it'd be great to be able to provide all the perks that come with being a paid member. If you can read like you can get my email fairly easy on my homepage. But thanks so much for your support. I appreciate it. Okay, perfect. You have everything. Sorry. It's a little early here in California. Rotel and cheese. So you shorted Duolingo. Nice. Good luck with that. Awesome. Looks like there's plenty of people into Zim. Very good. So I'm going to look at Reddit next. If you'd like to look at a stock, and you're a member, please put it in the chat, and then I'll take a look at it. And I appreciate your support. If you're not a paid member, it's $5 and I'll review a stock, and then I could take a look at whichever stock you'd like to see. Just buy a $5 super chat and we're good to go. If you'd like to become a member and then have the ability to ask for stocks to be reviewed, just visit my homepage, click on this button here, and you will be a member of the channel. Easy as that. All right, so let's get into Reddit. So Reddit is a stock that caught my attention because it was a stock that a member actually brought up on a member call, and they IPO'd recently. The IPO, this is interesting. Usually you see IPO prices and they come out really high, they come down, but this one really rallied. And I remember hearing Josh Brown with he comes out on CNBC and he's with the Compound. He felt pretty proud that he kind of caught this one and it really went up nicely. And he did sell the stock. He probably sold at a gain if you bought at the right times. But now, the stock's really come down 49% from its high. Now, a lot of stocks got hit with the sell-off that we had that started February 19th or so. Recently, if we look at the last month, it's up nicely. And I looked at their financial information. Things look good, but it looks like, Mike, you have a good point, which is how's the dilution of Reddit? So let me take a look at that. And I'm sure everybody on this stream is either familiar with Reddit or is already on Reddit already. So let's take a look here. So I'm going to jump right to the 10Q. That'll give us the balance sheet and we can look at the dilution of the stock. All right. So to see the dilution of the stock, we can see, this is going to compare the last quarter, and this may not be the best place to show it. Let me go to a different view. Because that would only show me like one quarter over quarter, or maybe year over year. But here we might be able to see multiple years, as you can see here. So we'll go to the balance sheet. Let's look at the dilution of the stock. Dilution meaning there's more shares out there, and meaning that more people it's like having a pizza. And 2 years ago, the pizza had 61 slices. So a slice is fairly big. But now there's 180 slices, 3 times as many slices. So when you get a slice, it's really 1/3 the size that it used to be, 1/3 the ownership that it used to be compared to the previous dilution. So there is dilution going on, even as we look at the trailing 12 months. Now they did IPO, which means that's the big reason why they went from 61 million shares outstanding up to 181 million is the IPO. So that one explains it. And they will continue to pay their employees as part of their compensation, give them shares because it's Reddit. How can they attract employees and compete with Meta, Facebook? You have Snapchat, Instagram, maybe even TikTok hires, onshore developers and people that really know social. Discord, and you've got Twitch, you got X. So you have a lot of places that are trying to get the best talent. Well, how do you get that talent? You pay them a good salary, but you can also offer them shares of the company. That's what smaller companies in this space will do. So that to me is acceptable. It's actually a normal business practice, and I'd rather the company be successful overall, continue to grow, and I think Reddit's growing at 61%. So if you can keep growing at 61%, I have no problem with you paying your employees part of the comp being shares. I have no problem. Keep the company growing at this rate, and the stock is going to go up because the market is. I'm buying into Reddit because I believe if you grow at 60%, you're a special company. And they're not tiny. Let's look at their revenue growth. So they're over $1 billion in revenue now, and they're growing at 60%. That means they're going to double every year and a quarter. And that's awesome. They can get to 10 billion rather quickly, and the cash flow is there. So things are really looking, in my opinion, good for Reddit. So if the stock's trading down today, I'm going to be buying. Yeah, down 8%. Geez. It is coming down quickly. Let me tidy up my Google Sheet here. And FYI, I publish this Google Sheet once a month. So if you're a paid member, you can go in and look at how I value these companies on the date that I valued them. And that'll be a resource 24/7. You can look at the Google Sheet and take a look at what the value was on a particular stock. So Reddit, I updated it on the 14th, and I have what is a 3% discount if I blend earnings per share and free cash flow. But when we look at the stock is going to sell off by 8%, this is going to go further down. So I'm going to buy more shares. One of the reasons that I want to buy more shares is that to me, Reddit is it just it's going to be a successful company. And here's what I really like about Reddit is their business is very unique. I'm going to try to get excuse me. So let's talk about Reddit and put them into my desirability quadrant because this is the main reason I'm buying Reddit is because of their, I think their barriers to entry into their market. So, all right. So, some good companies to use as examples on Reddit are going to be companies like Meta. I don't have them readily available, so I'm just going to grab Microsoft because I think it proves the point. And a weak company in tech would be like GoPro, and I'll discuss why. And I put Reddit up here. Why is that? Well, when we look at the strength of their moat, competition, they do have competition for the attention of that consumer. But the way the Reddit experience happens, people really get deep into a particular community and they stick to it. I mean, the famous Wall Street bets, all the short sellers of are the squeeze of short sellers for GameStop happened on Reddit, and that's that deep discussion. But if you go in there, I mean, you can go deep on a variety of topics, which is quite interesting. So I think that from a competition perspective, they're good. Network, maybe their network power isn't awesome. So I'll give them a B. Very good balance sheet. Revenue growth is stupendous. Profitability is there. Free cash flow is there. So, especially this revenue growth, they are looking great. This is why I'm buying Reddit. I don't think Facebook, Instagram, WhatsApp, all the meta properties, they don't have something that competes with Reddit. Facebook, I use Facebook. I've used Facebook for a long time. It's kind of superficial. It's a lot of imagery and it's very family oriented. That's where my family will post most everything, and it's neat. It's neat to see everybody's pictures and stuff. But when I want to get into a topic and really see strong opinions, insightful opinions, informed opinions, I go to Reddit. And that's why I put Reddit in the most desired quadrant, the green. So I'm willing to pay fair prices for companies in that space. And I want to own Reddit. I don't want to wake up 5 years from now and it's worth 10 times as much because it did what I thought it was going to do, which is it's going to become a $10 billion company. Well, if it goes up that much, it's going to be a big player and it's going to be worth a lot more. The current valuation of the company, it's a $21 billion market cap company. We're about to open, so we'll see how it goes down. If they become a $10 billion company, they continue to grow and really keep their user base, on the platform. I think they are going to be worth 200 billion or so. And you think about the international growth, right? Reddit is headquartered in the US, but once they start growing internationally, it's going to be really interesting to see them just increase their user counts. So that's my position on Reddit, and it's down 7.62. The market has opened, and that one there is just to me the business is very desirable. I'm doing really well with Meta, and I want to find the next Meta. And in this case here, I'm finding a smaller like Meta, that is unique in their, approach to social. It's really the user base is I want to say loyal, but it's more than loyal. They're very bought into how Reddit operates, the communities, and how it's really really deep in discussion on the topics that people want to tune in for. So I'm bought into the company's mission, where they're going. The fundamentals support the stock price. It's a desirable company, and I'm willing to pay a fair price. Now the stock's rebounding. Oh man. Hopefully I still have a discount at the end of this stream and I can go buy some shares. All right, so that's Reddit. Let me catch up on some comments here. And so I think I said good morning to you, Rotel and Cheese. If I didn't, good morning. Doo Prado, what's up? How you doing? Android PC, how you doing? Nice. So you already added some shares. Good for you. You're seeing a little bounce. Yeah, I appreciate that. I try not to buy in the early hours because early hours, like the markets, they do unusual things sometimes. And especially in the first half hour to an hour of trading, we could see some wild swings. Let's see what's going on with the S&P. So we don't have a lot of data, but it's down 1%. In the case of Reddit, it was down further, so maybe we should go back to Reddit. See how it opened way down, almost 8% down, and now it's only down 4.73. Well, those are the unusual things that the market tends to exhibit early in the trading day. All right. So, but thanks for the suggestion. It's a good one. Thanks. All right. So I think I'm caught up on comments. Keep them coming. Again, if you want me to review a stock, you know, you can pay $5 for a super chat. I can review a stock. I can do a compare. I think there was a compare request out there. If you're a paid member, you don't have to pay anything extra. Thanks for your support already. And I'll review a stock. So just let me know. I'll continue on. I wanted to look at another company that announced today, which was ICL. Now, one of the sectors that's done well is materials. And these guys are in the materials business. And ICL Group, together with its subsidiaries, operates as a specialty minerals and chemicals company worldwide. It operates in 4 segments: industrial products, potash, phosphate solution, and growing solutions. The industrial product segment produces bromine out of a solution that is a byproduct of the potash production process, as well as bromine-based compounds. It sells various grades of potash, salt, magnesium chloride, and magnesia products, and produces the market's phosphorus-based flame retardants and other phosphorus-based. So they do a variety of materials. And I visited their website, and they do a lot of agricultural fertilizers, and they also do some products that go into the oil and gas industry, as well as other products like the healthcare industry, pharmaceuticals, which was interesting and a surprise. So this company is down 2%. They announced before the market opened. This company is $8.56 billion company, pays a dividend of 2.83 and has a PE at 21. For the past year, this stock has worked. It's up 38%. For the 5-year, up 112%. So stocks worked. It's a small cap materials company. Looking at their revenue, the last quarter did grow by 2%, but it's been a lot of red. Man, look at all that red. And it's interesting that the stock price went up, even though the company wasn't growing. It was actually contracting for the full year 2023 and then 2024. So it's interesting to see the market was increasing the stock price. Now you saw that big correction from its high coming out of COVID. I think there was a shortage of materials due to supply chain issues, and I think it drove up the prices of these commodities. That's a reason why our inflation went up so fast, and they really capitalized on that during that period. But once that was over, it really came down. So what is interesting is that last full year, they did 6.8 billion. Before COVID, they were a 5.2 billion dollar company. So overall, it's a good business. They've grown and they're valuable. The market's bidding up the price. So looking at their trailing 12 months cash flow, 583 million. Cash flow is, it seems a little light. This type of business, it's a slow grow materials business. I'd probably multiply this times 15 minus debt to get to a general valuation. And I'm just going to round it up to 600 times 15 would get me 9 billion minus debt. And net debt is about 2 billion. So the business is worth about $7 billion if I do some quick math. So this stock's a little expensive. It's expensive by about 20% if I just do back of the envelope calculation. So this one's going to be a pass for me, but it looks like this stock's worked. It's worked for investors, and materials has been the number one sector, or actually was one of the top sectors. I don't think it's the number one sector anymore. It was number one for a while. So this one here is just a little too expensive. It's gone up nicely over the 1 year. It's coming down today by about 2%. And as mentioned, if we look at the sectors, materials is doing 10%. Number one is utilities. Number two is financials. Number three is materials. So that's what's going on out there. Let's take a look at the heat map and see what looks interesting on the heat map. So, wow, Apple's down. Tesla's down. Palantir's down. Meta is down. Google's down. Amazon's down. Microsoft is green. Healthcare is up a little bit. United Healthcare. All right. 2 days in a row. All right. Good to see that. So United Healthcare, boy, their stock price went down fast, but the business is really valuable. I continue to believe that United Healthcare is just a real nice opportunity for a value investor that, you know, buys when everybody else is afraid, because you're buying value when you look at United Healthcare. You look at those cash flows, you look at the growth. They've been a consistent grower for a long time. They're the biggest in their space. And they've had some bad luck. The tragic assassination of their CEO. Their latest CEO resigned, and now their previous CEO is going to come back to kind of fill in on that role until they find a permanent replacement. So that should get them by. Now, I buy businesses, and the management team, it's good to have a good management team, but it's not the reason to buy a company. The reason to buy the company is the value of that business. So I started to buy United Healthcare last week. So that should be a green spot on my portfolio. I don't own a lot of it because I just started buying, and I'm a dollar cost average investor, but we'll see how it does today. Hopefully it does well. It looks like pharmaceutical is doing well on a red day for most everybody else. Consumer staples are holding their value. Telecom holding their value. That makes sense. On a day where there's a lot of fear, investors go to these stable companies. And it looks like they go to Microsoft. They feel comfortable owning Microsoft. So that's a pretty good play. All right. So looking at the markets again, let's see if. So things are recovering a little bit. We opened up far lower than that, and things are recovering a bit. So it looks good. All right. So Yeah, it's you kind of Mike, you kind of agree with me not wanting to trade early. But you're careful with it, so that's great. Good. Shadow guy closing my position. Closing my position at 35% loss. And that's on Zim. Oh, my TMF, sorry. So TMF. Oh, treasuries. Yeah, rates are climbing. So when rates climb, so this is, yeah. So when rates climb, bond prices will drop. So right now is a good time. Like I'm a dollar cost average investor. So I bought some bonds today. I bought bonds, a bond issued out by Hewlett Packard that is going to redeem in 5 years. So the term is 5 years. I'm going to earn 5.3, 5.4%. I lock in that yield and I control my return for the next 5 years on Hewlett Packard. But when they're rising like this is when you have a rising interest rate market, especially if it rises quickly. It's what caused Silicon Valley Bank a couple of years ago to have a problem, a big problem, to the point where they don't exist anymore. And reason for it was the bonds they were holding with long duration were dropping in value, and then they had to state their uh, disclose that they were losing money on their bonds or losing value on their bonds. Well, that caused a lot of fear, and the market became very concerned with Silicon Valley Bank. They had a run on the bank, and now Silicon Valley Bank does not exist. So long bonds are, they could either be very I mean there's very consistent, high consistency in long bonds, but if we catch one of these markets where you have rates really changing fast, um, then you could see drastic wins or drastic losses as it relates to bonds. So looks like these increases are going to hurt long bonds, and those long bonds are going to go down in value. And this particular ETF triples the exposure, so it's a 3x bull ETF. So I could see that that's really going to be hit hard today. All right, so yep. And then Daryl, you picked up some UNH. Good for you. So Mike, you added some Chevron, huh? So Chevron, what's it doing today? Down 2%. For a little while, oil companies were beginning to make a little run, but Chevron's a steady company. It's going to be around for a long time. It's a Buffett stock, and they pay a nice dividend, 5%. So it's down today. It's down 2%. I'm buying into Oxy, and I'm probably going to buy some Oxy today. Yeah, 2.14. 2.41, excuse me. Doomy Trash, good to see you. Shadow Guy. So you bought SPLG at the open, huh? So Spider Portfolio S&P ETF. Okay, and it's recovering, so that's good. So if you bought it at the open, you made a little bit of money. Yeah, it's not a bad play. Good ETF. Hey, Brandon, good to see you. You want to take a look at TRP, and I think Trip is going to announce after the market closes. Let's take a look. Or no, I thought it was trip.com. I'm wrong. It's TC Pipelines, if I got it right. TRP, yeah. TC Pipelines. Let's take a look. So TC Energy Corporation operates as an energy infrastructure company in North America. So it operates pipelines, Canada to the US, within the US, and then Mexico, gas pipelines. So Mexico produces a lot of energy. They have oil reserves and they export into the US quite a bit. So, all right. So we have a pipeline operator. And over the last year, this one has worked 27%, and you get paid a really nice dividend. That looks good. Year to date, pretty good. You got 6.4 and then a 5% dividend. $51.8 billion market cap, revenue of 9.66 billion. Okay. And PE is 17, 18 forward PE. And they announced on May 1st. So let's take a look at. So they have nice rise in revenue. They're not subject to oil prices or gas prices per se, but I do know that natural gas prices have been increasing quite a bit. That is one of the bright spots within energy, and maybe people are needing to ship that around quite a bit. So um, these guys, their revenue looks like stock analysis isn't showing me every quarter, but it's showing me the annual. The annual growth in 24 was positive, and then it's been positive for the trailing 12 months. So that looks good. In this business, right, of energy, it's slow growth business unless oil prices take off or natural gas prices take off. These guys are more stable than an oil company because they're just doing the transmission. They're moving energy product from one part of the world to another, call it one area to another, I should say. Looking at their revenue growth looks good. That's a nice green flag. And when we look at free cash flow, has been a bit inconsistent, right? In 23, it was negative. 22 was negative. Negative in 2020. Understood. That's COVID. 2019, it was negative, and then negative in 2018. So maybe they had to put a lot of money into their pipeline itself through CapEx, and I'm going to look at that in a little bit. So 690, it is a growing business. Boy, it's good. This got a big valuation, and I don't know how you get to 50 some odd billion, because 690, yeah, 52 billion. Geez. So 690, if I were to say, okay, it's a growing business, multiply it times 20, I get to 1.4 billion. So I'm like not even close on cash flow. If I were to value based on discounted cash flows, I get nowhere close to their market cap. Gross margins 67%. Profit margins are very good. You see the free cash flow margins really poor. It's not very good. So let's look at their statement of cash flow. And I bet you it's that CapEx line. Here it is. So this is one of my, we all get to pick whatever types of stocks we want to invest in and the industries we want to invest in. And what I don't like about utilities is somewhat shown up here, which is this business has to put a lot of money back into their pipeline to manage it, to maintain it, to repair it, to keep it operating safely. And that's one of the undesirable parts of companies like this. They're putting so much darn money back into the business. I'd rather you put it on a balance sheet. I'd rather you buy back shares, but it's just the type of business that requires a lot of capital. You have to put money back into the business regularly. So that's what's drying up all this operating cash. Okay. And when we look at their balance sheet, they're carrying a lot of debt, 41.45. And that's one of the characteristics of these businesses like utilities and these guys here is, geez, you got a lot of debt. You produce very low free cash flow being cash you can do just about anything with. You can increase your dividend. You can buy back shares. You can put it on the balance sheet. Instead, they're like, nope, we got to take out debt to expand potentially. And we got to put capital back into the business to recondition all the pipelines that we operate. So this one here is not my cup of tea. It's just very big distance between their market cap and where I would value the company. I would value the company at like maybe $1 to $2 billion, believe it or not, because no, I had my numbers wrong. I'd value the company at $10 to $20 billion. But I'm really far away from its market cap. And it's worked for other investors. I think other investors like the consistency of utilities and they like these types of investments, which is, hey, if you own the pipeline, you're not subject to oil prices. You just move the oil, or you move the natural gas. You're not subject to natural gas prices. You just move the natural gas. It's just not, this isn't like the area that I like to invest in, and I'm kind of exhibiting why, but other investors do well in it. Just, I'm not in investments like this. So thanks for asking. And hopefully you found the comments interesting. Thanks, Brandon. Thanks, Daryl. You have a good day as well. So Zim, what's Zim doing? Is it going up higher? Oh man, look at that. It's looking good. Go Zim. It's going to build on this chart and keep going up. Good deal. And I know some of you guys own Zim, so hopefully this is a bright spot in the portfolio. Looks good. 11%. Nothing to sneeze at on a day where you have the NASDAQ down, but it's recovering. The S&P down. And then the Dow is holding its own, just down 0.21. So not bad. Let's take a look at the heat map. It looks like the red is not as vibrant. Meta is getting back to even. And Tesla's still glowing red. Energy companies are still glowing red. United Healthcare is still okay. Apple glowing red. And just one Apple customer out of, I don't know, a billion. But I am supposed to receive my Samsung Android device today, and I will be switching from an Apple iPhone back to an Android device. I had a Samsung for years and really liked Samsung devices. They were just really quality made, good product. And then I switched over to Apple, geez, I don't know, 5-7 years ago. My family's on Apple. So I'm like, all right, I'm going to take one for the team. And, for the most part, a phone's a phone. But I wanted to go over to Android. I like some things they're doing. For example, what Samsung is doing with their phones is they already have a GPU designed into their phones. So when you look at graphics, and specifically now when you look at AI apps, I think the Android side of the market is getting a head start on AI. So I think I'm going to try the AI apps on my new phone. I'll let you know how that goes. But that's a threat to Apple, which is, hey, especially globally, Apple is a dominant, you could say really successful in the US. Keep in mind, there are more Android devices in the world than there are Apple devices. there are more Samsung units being sold per year than Apple units. So Apple's not the leader in units. It is more expensive. So I think if you were to say there's more dollars being spent, or I guess overall equivalent dollars being spent on Apple versus Samsung, that's a fact. That is correct. Um, but I think the world is getting more competitive. And I think Apple's going to have a tough time competing in that world because if a device is the same price but delivers more value, which is I'm seeing in the Samsung device, I'm going to go for it. And or other parts of the world would be like, hey, why am I going to pay $1,000 for an Apple device when I can get a real good one for $100? That's a big price difference. So I think that's going to be one of the challenges for Apple. So we'll see. Shadow Guy, welcome back to. All right, I already have a Android friend. Cool. Yeah, you told me about this company, Xiaomi. You want to see crazy phone book? Yeah, and I don't think that was available here where I live, but you did tell me about that. This company is, I think it was flourishing, right? Like the was really rocketing up. The company that this is a Chinese company. I think their stock was doing really well. Yeah, this is it. Yeah, you told me about this company, man, 163% because of their growth. They're growing really well. This is a smartphone competitor globally. So, all right. So back to stocks. So we've got stocks are recovering. Looks like Microsoft is leading the pack of big companies. It's going to be kind of a dull Monday. Last Monday was awesome. If you recall, man, we had the real big increases on Monday. Looking at the big, massive caps, we've got Microsoft continuing to increase their value. Nvidia's down a little bit. Year to date's holding its own, but today it's down a little bit. Apple is a sick puppy. It's down a little bit today and down 18% year to date. Amazon is having an okay day given that the rest of the market's selling off. And then another sick puppy is Google. What's interesting is a lot of super investors own Google. And I think, like me, they're waiting for Google to start to work because it's a company that is so strong and so into great businesses, search. Now, there's stories that, hey, is search going to be replaced by AI? It may over time. But Google themselves is a big player in AI. They may benefit in a very big way from the whole AI move, and that could replace and maybe even expand the revenues of search. Their YouTube business is the number one streamer in the world, ahead of Netflix, ahead of everybody else. It's growing faster. They don't have to create content. They have people like me creating content. They have every studio is releasing on YouTube, and releasing clips of their movies and so forth. F1, I don't subscribe to any streaming service for F1. I just wait for the race to be done. Then I go to YouTube and I see the highlights direct from F1. So everybody has to get on YouTube or they'll be left behind. Beautiful business. And then their public cloud business looks great. They have the robo-taxi business, number one in the US, operating in half a dozen cities. The company's loaded, the lowest PE of the big cap stocks. So I'm going to keep buying shares of Google. I think it's going to work long term. Meta is having a rebound. It's up 8% for the year. Berkshire, it's seen a couple of red days in the last week or so. It's doing well for the year, up 13%. Another sick puppy is Tesla. It is down 3.6%, although it's had a pretty good rebound over the last couple of weeks. Broadcom, I think Broadcom is one of the more expensive, overpriced stocks. It's down a little bit. And TSM is down a bit. Walmart down 1.3%. Walmart, I think, is also overpriced. And I did a video on Walmart. I looked at their fundamentals, and boy, you got to pay a lot of money per share to buy Walmart. And it doesn't have a lot of appeal, which is, are they going to grow? No. Are they the biggest? Nope, not anymore. Amazon is. And Amazon's growing faster, making twice the free cash flow than Walmart. So Walmart over time, I think, is just going to continue to get less valuable, less power is going to be the case for Walmart. And I'm not a Walmart stockholder. It's not an industry I like. I don't like retail, and I'll buy it if it's a really, really good discount. But for the most part, if I'm going to be long, I'd rather be long Google, Meta, Amazon. Those are the stocks that I'm long with. And the others, there's a reason why I'm not in them. Bear Light, good to see you. Thanks for joining. It's pronounced show me. Okay. Thank you. Thanks, Shadow Guy. And having gotten to know you, I know you're more traveled and you've lived in different countries, and you have a better sense of how to pronounce these things. So thank you so much. Mike the Dividend. Yeah, my son would never use an iPhone. I'm going to like this comment. Yeah, my son would never use an iPhone. He thinks I'm an old dude because I use an iPhone, because he prefers his Samsung. Says most of the IT people use it. All right, man. Well, there's another reason why I'm glad I'm going to Samsung. And FYI, my two sons are on iPhone, and the one that's a real techie, he doesn't really care what he has. He actually, he bought a used phone on, what's that old platform? eBay. And he was going to put it into operation, but he's more of a PC guy. He's built his PCs and stuff, and he is kind of a techie guy. And then my older son, he doesn't care about his phone either. He just takes whatever we got him. So interesting. Thanks for the comment, Mike. I'll let you know. I'll probably be. And the thing about like iPhone and smartphones, I don't know about you guys, but the world really changed 20 years ago. Yeah, call it 20 years ago. Everybody had a BlackBerry. And man, you were on your BlackBerry like it was pretty obsessive. Like you'd be on your BlackBerry all the time. And just to keep up like on what's going on, with work, with everything. And then we cut over to iPhone. The experience was made better, or I would say tablet-based smartphones. So whether you're on a Samsung or an iPhone, the experience improved, and people were still on their phones. But nowadays, I do not use my phone as much as I used to, and I think it's part of it is that we had COVID, so that definitely changed our behavior. Right? I didn't have to go out and meet people as often. In fact, it's rare now that I meet with people because everybody wants to meet on Zoom. Like, so I'm on my PC most of the time. And once, like I have two workstations. One's my business workstation. I have a laptop and two nice size monitors. And I have my stream station that I'm tuning in from. I have this big monitor and then a side monitor. So the whole, the big screens give me so much useful space. I can't do much on my iPhone. So I'm spending 90% plus of my time behind a PC or a laptop with monitors. Even when I travel, I have an extended monitor. So I have two monitors when I travel. So my iPhone, or soon to be Android device on Samsung. I just don't use it as much as I used to. And I don't know if I'm I'm rare, but that's just what happened. We'll see. And Mike, um, wow, do me trash. So let me catch up here because I think some interesting stuff. So do me trash is saying, show me phones are everywhere. Well, looking at their earnings and their revenue, I agree with you. BlackBerry and Blackjack. I have them both. I had them both. Cool. So there was an article in the New York Times recently explaining how China pushed their phone manufacturers to start making cars. Interesting. So the car business, has changed. One of the big causal factors is when we go to electric vehicles, the car becomes a simpler product, right? You don't have a drivetrain, internal combustion engine that has, 1,000 moving parts and a transmission that has another 1,000 parts and so forth. You can actually, like, electric motors are a simpler concept that is not a new concept, right? We've had electric motors forever. The battery systems, most of them are made in China. So China has a strategic advantage. They are big producers of the battery systems that they can use for Chinese EV manufacturers, and the world has to buy their batteries from them. So you talk about the German automotive companies are buying Chinese batteries, US companies are buying Chinese batteries. So they're going to China for a key component of the new generation of cars, EVs. So it makes sense that if the Chinese government saw that, hey, we already make the battery systems, hey, we want you guys to make cars. If anything, for domestic within China consumption. But now Chinese cars are showing up in Latin America. It's like they're showing up in other places. So that is a huge competitive threat to car companies. I am not invested in car companies. I would not invest in car companies unless it was just a really, really compelling discount and a compelling situation. Because I owned Ford and it would never catch a rally, or would catch short term rallies, but they were producing cash at high levels. They were growing their business. They were doing all the right things, but the market just didn't buy them. The only stock that the market will buy and is Tesla, and it's a retail stock. I've got nothing against people that want to own Tesla stock. Um, if it works for you, great. It doesn't work for me because it's, in my opinion, really overpriced. I bought Tesla stock like 15 years ago, 10 years ago. Yeah, about 10 years ago, maybe 12. And I owned it for, I don't know, 4 years or so. And I did okay with it. Um, but I was kind of done. And once I, got out of that stock, I've never been excited about our car company since. And Tesla is losing some of its shine. It's now just a car. I drive around Southern California. And Southern California tends to be a hotbed for cars, man. Everybody's got cars. And there are so many nice EVs now. Mercedes has a nice EV. BMW has a nice EV. The Chevy Blazer EV looks great. Um, you've got Nissan's come out with a really nice EV lineup. Toyota's out with their EV. I mean, I can go down the list. Honda's got a good EV. There's even this new company called Slate. And let me show you this company. It caught my attention. I think they're, of all places, right? I was on Reddit, and this car comes up. And I'm like, what? What is this thing? This is a really affordable $20,000, and you got yourself a truck, and it's an EV. And it's like, whoa, this is like somebody who played a lot of Minecraft designed this car. And this is where the market is, was like, now we're going to get different cars coming out of the woodwork that seem interesting. And back when the car business was really desirable, like 50 years ago, a big competitive advantage is you had to build this giant factory and you had to have the means to produce cars. If you had that, you kind of kept competitors out because they couldn't compete against you. But now these guys, look at this. You can configure your truck to be an SUV. It could be, I guess, a fastback SUV. $20,000 for an SUV. I don't think that's a 20,000 model. It's just the base is 20,000. And I haven't looked into this. Like, who makes this? Is this their, where's it made? So let's look at About Us. So these guys are making it made in USA. Oh, this is exciting. So things are designed in California and Michigan and assembled in the Midwest. Man, this is cool. That's great. So own a $20,000 truck manufactured in the US. Pretty cool. And the look, right? It's pretty simple. Like, I spent the weekend gardening with my wife, and we took 3 trips to Home Depot. This is totally a Home Depot Costco machine right here. Is you go to Home Depot, load it up with stuff, come home, go to Costco, put in that giant bundle of toilet paper and paper towels and all that big stuff you get at Costco. This is a perfect machine for that. All right, so good stream, guys. Thanks for tuning in. Not as fun and exciting as last Monday, but it's good to see you guys. So let's see here. So I saw this discussed on another channel, SMMT. Let's take a look. SMMT, Summit Therapeutics. So it's down 4%. This is a $17 billion market cap company. Wow. Whoa. All the gains have been really through the past year. It looks like so let's take a look at Summit, get a little more into their fundamentals. So Summit Therapeutics is a biopharmaceutical company focused on discovery and development, commercialization of patient, physician, caregiver, and societal friendly medicinal therapies. Medicinal therapies. Oh, cool. So biotech. All right. Okay. So these guys have a pipeline of medicinal therapies, drugs. Looks like they have some doctors that are involved at the CEO level. Very good. That's good. I'm glad to see there's innovation in the healthcare space with pharma. Okay, so Summit, the 1 year is where, holy smokes, up 416%. $17 billion market cap. They don't make money yet. It's a strong buy, 62% discount based on the price targets that analysts are putting on the stock. They don't have revenue. This is pre-revenue. They're in development of these pharmaceuticals. If they get approved and they get commercialized, then we're going to see how much revenue, how valuable they are. This is a speculative stock because you need to speculate on how successful they're going to be because we don't have any fundamental information yet. We don't have any revenue. They were probably operating on grants and stuff before. And that's what the revenue was, tiny revenue. So this one here isn't in my wheelhouse. Looks like they're backed by Jeff Bezos, huh? Interesting. We'll see. We'll see. It could be, I mean, a lot of these companies have unmet expectations because when a company doesn't have any real data, revenue data, profit data, so forth, it's limitless. Like, oh, they could be 200 billion in revenue. No, or they can be 2 billion in revenue. Who knows? Because there's no data. Nothing tells you the limitations. So it's I can understand Jeff Bezos with his $150 billion net worth throws a few bucks here because he understands the concept and he thinks this could be a good thing, right? He bought the Washington Post, Jeff Bezos did, and he did it with not looking at any fundamental. He just thought it was important for the Washington Post to exist and he wanted to own it. Okay, got it. He started a rocket company. So I'm not going to use Jeff Bezos as like the green light to buy into a startup. This is a startup. If it works, we'll see if investors make lots of money or if the stock settles down at 5 billion and they lose a lot of money. This one's way too risky for me. Yeah, I just, and I don't understand the science either. If you were showing me a company that was at the core of what I've done professionally, I might jump in, but not on this one. That wouldn't be a good one for me. So market is coming back now. Oh, nice. Very nice. Well, we're getting back to even. That's good. Did I lose my chance to buy more Reddit stock? Jeez. Meta's up a little bit. Amazon's up. Nvidia's up. Apple's still down. Tesla's down. All right. Well, it's not going to be a terrible day. It's going to be a flat day. Right? I'll take it. We've seen good appreciation over the last couple of weeks. Let me take a peek at Reddit. Yeah, so I think one of you guys bought Reddit at the open, so you've made 5% on Reddit. Good for you. I'm still going to buy shares. I wouldn't mind owning a pretty good sized position of Reddit. Just totally makes sense as a business. They have the fundamentals. Oh yeah, that's all right. Reddit's a small position. The one stock that I wanted to talk about, this came up yesterday on our investor call. And here's where I'm going to go with this is investing in stocks is so interesting. It at times feels like you need to play chess against the world, literally, because you have stocks like Uber where the market says, oh, robotaxi is going to really take a bite out of their business. So the stock would, sell off. And I'd be looking at it going, wait a second, I disagree. I think robotaxi might be an opportunity and look at their growth and look at the fundamentals. And and I bought and bought and bought and bought. And when I do my super investor research, let me get this guy put in here right. I see that super investors are buying Uber. Bill Ackman bought a big position, 30 million shares. David Tepper, he's like number one on my rankings. He more than doubled his Uber stake. So it's good to see that, okay, this is going on at the super investor level. The stock is working. I mean, all these things kind of align. And what is an opportunity is when the market sells a real good company off, I buy and I build up a nice position. Uber's now my third or fourth biggest position in my portfolio. And I'm glad that's the case. It's helping me have a very good rate of return year to date. So go Uber. It was gratifying to see the super investors have piled into Uber. And man, I don't think it's going to let up for a little while. In the last, month and a half, it's up 42%. So go Uber. And I'm sure a lot of investors are jumping in after these really famous, successful investors have jumped into Uber. So I think Reddit is going to be similar to this. I think Reddit's going to be this, maybe even better, because Reddit is really profitable. You look at their margins and so forth. It's just a really profitable business. Their product is the users. The users create more product by expanding like the content they create. And again, the international growth is really exciting. I think that's going to be a real big part of their growth in the future for Reddit. Awesome. So let's go ahead and land the plane on this live stream. Thanks for tuning in. I really appreciate it. It's a good way to start the week, just kind of get our head around the markets and see how they're going to trade. I'm curious to see how interest rates are working. If we have stocks open really low, but then they came back, all right, perfect. So it was far worse worse. Interest rates had risen far more than this earlier. So I put a buy order on a stock, which it did hit. And so I made a little bit of money on that bond that I bought. So it looks like interest rates are not going up as much as I first saw early before the market opened. So that is looking a little better. Well, thanks for tuning in, Brandon. Appreciate it. And Mike, Shadow Guy, thanks for joining me this morning. Good luck with your investments. And everybody, thanks so much for your support. Keep in mind, if you're not a member yet, paid member, consider joining. I think there's a lot you're going to gain from it. I show my valuations. I post them so that members can view like the work that I've done. There's member calls, which have been fantastic. We just get deep into investing topics. And I think it's a good place to, connect with other serious advanced investors. And I really think you'll get a lot out of it, as well as other tools that I put out there. And you get visibility to investor-only videos, which I'm producing a lot of these days. If you go to the channel, you see a lot of member-only videos. I'm probably going to put 60 to 80% of my efforts into member-only videos going forward. And I think I can do better work when I'm really focused and really I've gotten to, I think, a good number of paid members. And I just want to keep everybody in as a member by providing the best content. And so if you want to see that content, become a member. So that's it for today. Everybody, good luck with your investments. I'm going to try to publish my stream schedule so you guys know when I'm going to stream. and try to be a little more on a schedule each week. So look for that to come your way. All right, everyone. Thanks for tuning in. Take care.